Good morning, class. Welcome to Homeroom with Unc and Market Monk.
Morning, P. How's your week?
Good. I feel like I should just go ahead and download Groupon just to show my appreciation for that move. Um, that just kind of made my week in a pretty tough week option wise. So um, pretty good lesson there. Just last five, pretty clean read to the upside. Um, Sold at 14. It went ahead and hit your number, but I still had a couple options left. But yeah, I mean, just that just kind of made my week. And then AAOI, just some park and wait stuff. Quantum, I've stuck with those this whole time. So, reloads there worked out. But yeah, 3-2 market overall. So we're kind of ready for that, I think.
Nice. Yeah, that Redfin Monday morning was good for me. I didn't get the top, but I got enough of it. Um, just to get out for me when a stock deal is going to be all shares. I usually don't like to hang out if it's actual cash. I'll hang out a little bit longer. But you seen the pullback in that afterward, so felt good. Not necessarily high pointing it, but felt good about the trade. Um, AG finally got out of the range that I was rinsing and repeating, so the accumulation there, I probably had about 40% of my normal sizing for free in AG. So still got a large chunk
Yeah.
of it, but made the account look good. And then miners overall were good last week. To be honest, I talk about the 3-2 market when I woke up Monday and was right at where I like to be for the week, and I was like, you're not gonna fool me. I'm just gonna golf a little bit. So timed that really well with it. It's Monday, Tuesday been down. Wednesday's a crapshoot, and we kind of make it up. Not necessarily the whole candle, but we start making it back on Thursday, Friday. So I DCA'd into a couple things in that environment, and again, we're closer to the vest or the smaller positions and better names, and um, it's doing well. It's not peanuts, but it's cup fills, a lot of it. Without Redfin, I wouldn't have had nothing to write home about. But yeah, good week. It just adapting to the environment that we were early on. Sure has paid off so far.
Yeah, absolutely. So a couple things based on what you talked about. So I I had an experience like this with Twitter stock when Elon bought it and all that, and it was like this is going to be acquired at this much per share, but
Yeah,
I still sold on the initial pop that was below that closing price of the deal, because from what I've seen, it pops up and then it does pull back, even though, oh well, it's going to close for this price, it's free money. I still don't like to hang out there. It can take a long time, deals can fall through, stuff like that. So I had a similar approach with Redfin. The you know the flow look for Redfin has been much higher than that in the past. But we talked about that. They kick the can down the road, and it's pretty clear that a lot that flow were jabs at something like this, and so just exceptional gain from our entries and where we were, and you kind of move on, and that's sort of how I feel about these acquisition trades. I Kroger. I was on I've been on both sides of that one.
yeah,
That deal fell through, and I think both stocks like Kroger took way the hell off, and I do like ACI here. Airlines that arb trade people were trying with JetBlue and all that completely fell apart. Was bad for everybody. So these acquisitions, like, you want to get in, you want the hype and the run up, and the deal gets announced, and the stuff takes off, and it's at that point I think that you move on. I don't think that you always really want to see it through. um, Maybe if you're in investor mode, and someone's acquiring somebody, you keep your shares or whatever. But especially when you're talking smalls, I think you go ahead and take the win. So I'm agreeing with you there.
You don't want to be, what's that, MMLTP or whatever it is. You don't want to be one of them guys.
Yeah,
That's for
yeah,
sure.
Right. Yeah, because then you can pivot to conspiracy theorist and make accounts about all that's going on with that. So yeah, no, that's not where you want to be.
Twitter's a great example. The big difference, I mean, a great lesson for people on what I looked for. But Twitter, I remember the initial thing happened. The initial news that he was going to buy it, and it had a good run, and then it checked back, and they kept saying, this is going to be the price. I think it was like upper 40s, and in like July, maybe June or July, and it was back in the like upper 20s, and that was going to be an all cash deal to take it off the market. So I vividly remember, like, if you guys want to park some money here, it's pretty guaranteed that he's going to buy it at that price or more. And that worked out well. Well, with Redfin, as soon as I heard it was a shares deal, um, and I recall the last flow read that you had was 10, not 12, like we had been getting. Um, then the price of Rocket dropping, that was a good that was a perfect recipe just to take the money out. Because you're going to get 0.79 shares was what the math came out to, of whatever Rocket is. So Rocket doesn't have to stay up at what it was. The 16, if it dropped down to 12, then obviously that conversion rate's going to be a little lower for you. So simple math there, and then again the flow read coming in $2 lower the last time you read it. Kind of was just, yeah, made me wash my hands of that trade. But yeah, there's always some intricacies to the deals, and it's not just to the moon or to the price in those situations.
Yeah, and I think the next phase of it to me is sort of what it means for the sector. You have a decent chess piece in Redfin off the board. So now, what happens with this bigger version of Rocket, and then I look at Open is kind of the one that's most attractive to me, and then I guess the macro side of real estate, still taking shape. And I use that phrase. That was the first place I used that phrase of, kicking the can down the road. I mean, I think there is a lot of opportunity in real estate, despite how bleak it looks. It's just, these stocks being forward looking and all, they kind of price in a lot of that. And then any kind of anything positive will, you'll see those accelerate. And I know the flow to look for. So yeah, so pretty excited about that sector in the future.
Yeah, just having a plan there. It's not the first time we hit that level on
Yeah.
that stock. More than one trade. Not necessarily that I treated it as two trades this time, but I've traded it a few times over the last year, and you just when you're buying something, $5, $6, $7, $8, and it goes to 12. If you're a trader, you need to trade it. We talk about that. You're not going to hold on forever. And if you want to keep some and move your stop loss up, that's perfectly fine. But you can't do the work and have a thesis and not win. I mean, that just isn't fun. Getting washed around like that. And a lot of like not necessarily the CLSK guys, but them MP guys or MMTP. I don't know what that ticker is now. Like those guys, I mean, they were up at one point in time. They've probably been up 100% a couple times, but that ship has sailed. And again, is just taking money when you're right, and moving on to the next one is just the way to go. And market conditions also dictate that a little bit, which I think is a bigger topic for today.
Yeah, absolutely. I wanted to touch on options trading for a minute, just to just give people kind of a sense of things. And I had mentioned this to you in a message, and so I just wanted to kind of share with everybody. But for me right now, with the conditions and this 3-2 market, and if you're following us or in our room, you really need to know what that means, because it's heavily influencing how I trade right now. And I mean, you can just see here, MSTR. I'm pointing out this one because I have good pivots on it, but I mean, you can't really swing this. This is a 15-minute chart, and you see the range it's having right now. But you can trade it off the pivots. It's kind of quick hitters, and I mean the thing is it's not really going to work every day. So you look at like Wednesday, Thursday, it didn't really do much. It was hanging out below the pivot. I put it in my notes, looking to trade this pivot to the upside, but I don't necessarily want to like swing heavy and accumulate down here or anything like that because I don't have a pivot below. So to me, I mean that's pretty dicey when you look at what Bitcoin's doing and and all of that. So to me, you kind of keep hitting it, be willing to take some small losses or hedge or whatever, and then you get a day like Friday where it just moves right through the zone, which is why in options trading, I stay on this. But then if you look at something like Enphase, I mentioned the other day that I'm pretty much, kind of shares only here, rinse and repeat mode. I have been adding under 60, but you look at, your opportunities to add under 60, and it kind of, bled out, continued. It didn't even try to claim it Friday. And where do we go? I mean, we could easily go back to 54, 52. You're swinging options in this. You're in for a pretty bad time. Even if you're May, June, whatever, the 3-2 market bleeds out option premium because of those. It's been because of the 3 days down, the fact that Thursday, Friday are not fully recovering where we were. It's not a time for casual options trading. So it has to be quick hitters, and you have to have a plan to say I'm wrong here, and be wrong early, and you can just go back into it. If today's not the day for MSTR to make win like Friday, it more than makes up for the couple losses you had. But if you just diamond hand options or get in too large and you need some move to happen, it's really risky right now, even more so than when the market's in a pretty stable uptrend.
I did that midweek session a few weeks ago, and you know, um, it was more like laid back, light a cigar, have a beer session with the boys, and Jamie was kind of
Yeah.
like, oh, there's Unk, because I try to tone it down a little bit to not, I don't know, be I don't to be more suit and tie than shock jock. But this 3-2 comment, and I'm not calling no one out. I can say no names. I love the guy to death. But if you don't fucking know what the 3-2 market is, really, you're not doing the fucking work. You're not at all. We've been pounding the goddamn table on that forever. There's randoms that know about that shit because we put this session out for free. I mean, it's one of the best theses, I think, market theses you've ever came up with. Um, when I used to kind of steer that ship. So, like, we're in it. You should know about it. And if you don't, pick up your fucking shovel, please. All right, that's a little rant there. But great examples here on some shitty stocks that I don't like, P. As to the what you need to look for in this market, and it's larger time frames and candle structure. And again, these are some
Right.
shitty stocks. I don't like MSTR and I don't like Enphase, especially from how I trade for several reasons. Enphase might be coming
Yeah. Yeah.
around though. But if you look at the weekly on both these charts, MSTR, the last three candles, some reason random three candles, which is a check for me, has this $70-$80 range. Yeah, that's tradable. You're getting lower highs every time, so you need to be mindful of that. That's the market we're in. But then you just go over to Enphase, PH, right? Yeah. And these are some baby ass candles. Like I zoomed in so they look big, but if you look at them on a whole, they're not really big candles. And then again, your range down here is maybe $10-$8. So that's where you should be living right now on cut fills, on rinse and repeat trades, is on larger time frames. And if there's the range, and if there's common range over the last 2-3 candles, that's you kind of set your alerts around the bottom, and that's where you grab a little piece, and when you check back up, you take it off the table, and you keep doing that. And I, most cases, I'm not accumulating free shares. Simple math on that is if it's up 10%, you keep 10%. Um, but the
Yeah.
10% trade on anything like that is great in the current conditions, and you get that familiarity, or you use the familiarity that you know in a chart already. Either way, um, and then be selective on your bigger positions, which you did great with Groupon and AAOI, whichever one it is.
Weekly, it's interesting that the wicks on the weekly are, dipping below my last pivot. So it's I mean, so to me, and I see this in flow too. I mean, this is sort of kind of your last chance here. I mean, because if Bitcoin does dip into the 50s or something like that, um, MSTR, my last big ads on this share side were in the 120s, and we're going to go back there if Bitcoin does do that. Like, if it does drop there, because there's just so much there's so much leverage in this one, that it's gonna, if you were happy about how it outpaced Bitcoin going up, it does the same thing going down. And going down is where I originally even found this stock. So, so it definitely can do that. But option side, it's been one of the safest trades on the option side, just because of how it responds to these pivots. But yeah, I just want to encourage people, just be really careful with options. It's not the time to pick a random tech stock and buy options and go to a meeting. It's not a good environment for that. And then the other thing. So I like seeing people doing their own work. Bringing their own setups in, and I'm happy to read things. It's I mean, the one thing I'll say is that you kind of can't really force the process. And so the hit rate on people bringing stuff to the table, to me, um, is kind of low. That I don't I don't see the flow there to support whatever idea is happening. And on that note, I need to have the idea with it, rather than, hey, give me a read on blank ticker. I can do that, and it's fairly fast. But I really want to know, why do you like this right now? Why are you bringing it up? What is it about IBM that makes you want to take a look at it right now? Is it coming from TA, flow, whichever? But the best stuff still remains the things that show up in collabs that come from your side or come from my side, and and when those two things align. So I think, to me, if I were coming at this fresh and in an environment like this, my independent work is going to come out of collabs, and that I'm going to focus on, based on sector, style, whatever it is, these three, these five, and I'm going to study those, and I'm going to trade those, and then hop into some of the A+ setups that that come in here and there, rather than just kind of going at it independently and bringing stuff. That's just how I would do it. Everyone's free to work how they want, and I'll help you with whatever you want to do. But that's kind of the most fruitful approach, I think. And I've seen it with several people in our room that kind of grow their own style based on stuff that we're already working on.
Yeah, I'm with you on most of that, but I do not like the ones that are just because they've seen a large order. That's just looking at flow. That's not reading flow and understanding the
Yeah. Oh yeah.
or
Yeah.
whatever it is. I mean, for me, those
Right.
are like not a waste of time, but I'm not going to put a lot into that. especially as a TA guy. And I do see that a lot on Twitter, and it does creep into where, well, just wait for the big order. Well, that's not, it's going to have a
Yeah.
different story than just a big order. I mean, I'm not a flow guy. I don't hunt it down, I don't look at it. But I know for a fact that someone just buying 10,000 contracts of something or whatever the case may be usually isn't a sign for anything, because it's more of, the only way I can say it is just looking at flow does not work. You need to know how to read flow, and there's a lot more that goes into it than that. And it's on my end. I mean, you can play EMA bounces, especially right now. But you from a TA side, like, you still need to incorporate a little bit of level 2 on the bigger plays. I mean, if you can't read time and sales around levels, then that level's not going to show you what real strength or weakness is, or where buyers really step in, um, or where sellers step in some cases, and even in those cases when buyers or sellers step in, is it going to hold or bounce or continue the way through because an there's still more buyers or more sellers. Like, there's more to it than just a level or a big block buy of options.
I talk about filters. I mean, that's what I'm filtering. It's the noise. I mean, those big orders like that is not really what I'm interested in. It's the notable setups in option flow for that particular sector or size of stock. I cycle through a bunch of different overlapping filters, and kind of keep those to myself. I mean, if people really want to get into it, I can show you what I'm doing, but it's just not something I'm just going to put out there. It's my decision. I like what we do. I'll teach people who want to learn, but the point is that somebody buys $10 million worth of SPY contracts for June. Okay, I mean, that's the kind of stuff like Cheddar Flow puts out.
Yeah,
and it doesn't really tell you much of anything, because all of those people have a lot more going on than that. And the best front loads I found are not huge orders. They're decent sized orders, often broken up and hidden, and piecing it together is what I'm doing.
If that worked, I would use it, and we probably wouldn't be partners. I mean, the simplest I could put it, right? Like, if that worked, why would I lean on you? I mean, there's more to it.
Yeah.
That's pretty obvious. That's a good what do you want to call it? Divergence, because my filters, my scanners, not only will I give them to you, I'll show you how to use them. That's fine, because I know the work it takes to do it. So I mean, it's nothing like, for me, it's not a magic trick. It's just the work and being consistent. Like, I'm scanning 150 or 140% volume every Wednesday on 500 stocks. You want to do the work? Let's go. I mean, I got a 3-day ER scan. You want to do that? Let's go. I filter things by percentages.
Yeah,
so for me, like, I know that people aren't going to jump right in and do that much work, but I do always want them to see how much work it really is, and that's why I've always been that way with that kind of stuff, because it's not easy. It's not easy, and you should have a floor plan. Like, if you're building a house, just put up 4 walls. Well, there's a lot more than 4 walls. You got to worry about where your plumbing's going, where your electric's going. You got to worry about your airflow if you got an HVAC system. You got a lot of stuff to worry about. It's not just, let's put up 4 walls and a couple windows.
I agree. And I think, for me, my experience with it, like, I can just go out there and say, announce a, big flow lecture, and 2 people show up because they don't understand it or want to put the work in or whatever. So I'd rather just do, independent study with those 2 people than, put a lot into, Flow 101 as like a course or something. So yeah, that's just kind of been my approach to it, and part of it is that I'm here to work with you
Yes.
and
Yes.
enjoy the room, and then, but I mean that part of it is kind of secondary, and it's why we don't put the room on sale or whatever. Here's the work, here's the receipts. You want to trade like this? Here we are. But I'm not a big hype man, so that's how it is. I'm not good at social media, but it is what it is. So
Yeah.
I'm fine with what we do.
I've always just had that mindset of, if I'll do the work you're willing to do, and then from a selfish standpoint, that
Yeah.
if I'm going back over my basic stuff, it's kind of a refresher for me. It keeps me in the batting cage, so to speak, um, and not getting too
Mhm.
lazy with what I do. And again, like you said, the room's not on sale ever. Well, that's kind of, I'm still have, and I'll probably never let it go. I'm trying to build a community of people that know how to trade. So, the more eyes, the more weight we can pull, the more stuff we don't miss. So yeah, I mean that's obviously the goal, not just being right or wrong, or building subs. So I'll probably die on that hill, which is fine, because I do okay. But getting guys like Carlos, I mean we start at the very beginning, getting guys like Pac, all the way to guys like Carlos now, and helping them with, in Pac's case, probably one small thing that changed his whole career, and Carlos, someone fresh as hell that is becoming profitable. That's why I'm in it for. I do want to. I hate saying it, but I do want to change people's lives, so to speak, or give them a little bit more freedom, because I have a lot. So I want to pass that on to people. It's kind of the pay it forward. Um, I do some community service around here, but this is the kind of community service I like. So um, yeah, it's again, that's probably what makes us great, is because we're not. I don't want to say we're not on the same page, but we definitely have a different approach to almost everything, and you need that diversity. That's good DEI, in my opinion.
Exactly. Yeah. 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 Totally with you.
Let's get back on
Um,
this market conditions a little bit. 3-2,
what?
man, and it's been Monday, Tuesday, back
Yeah.
Thursday, Friday. I said a few weeks ago that if until we have a good Monday, I think we're kind of on the lower highs and the lower lows pretty much on most things. I do see that breaking up a little bit. I also think the SpaceX thing tomorrow might be um, not bullish for the market, but optimistic short term for the market. So we're gonna see how that goes, but um, definitely interested in your opinion on where we are, and if we're here for a while, or are you seeing cracks in that now? Because on the TA side, I mean, we'll get into it in a lot of cases in the next session, but there's some stuff that's ready to be done with this 3-2 market.
So this was to me kind of an encapsulation of the 3-2 market, just on usually Nasdaq futures, kind of just Monday disaster, and then Friday didn't quite get it all back. And I mean, if we do that again, probably not as severe as last Monday, but again, I mean, you're just you're starting to form a kind of trend to the downside here. And I don't know, like TA side, a lot of people are talking about Nasdaq like changing trend, or breaking some big weekly trend. It probably just depends on where you draw your lines, I guess. But I don't know. I'd be careful about having kind of like an overly bearish thesis. I mean, to me, we'd have to sustain some weeks of selling before we get to there, and then at that point, you don't really want to chase puts anyway. But yeah, so that's sort of my take on when I look at sort of the candle structure of it, that we keep bleeding out and not quite recovering. So it's we're not setting ourselves up to go higher just yet. Now, flow wise, none of this is really none of the numbers that we're hitting are really that surprising. I mean, it's this is flow I talked about, and I brought up SQQQ weeks ago as something I was into. But yeah, I mean, so the flow picture, you have things like as low as like 525 showing up. You've got these weeklies at the 573p, which did well. 560p is kind of leaning sold a little bit. I mean, this is sort of the one that's going to set the tone, for the week where that goes. But yeah, but like June 545, that's kind of plausible. So I do think that 550 area is pretty crucial on the SPY end, and I don't know where your numbers light up on that.
I mean, I for almost a damn year said this 50 is going to be healthy. Well, when you get to it, you got to see how it responds. And I mean, we're one candle into it, but
yeah,
the dip down to the 550 psych and then coming back to pretty much right where that 50 SMA is. That's pretty strong. I want to see another tight candle on this. If I think we're going to go anywhere to the back to the north.
Yeah,
but you're going to get, I've done this long enough with you that, when we do get, let's say 585, 590, if we do get some momentum that way, you're going to start to see those 615, 620s creep back in, and that it'll be an easier trade on that. And I think you're seeing, I don't know how to say it. When we get into this kind of market, POC becomes real active because I think because they trade SPY and SPX and whatnot, and it's easier to trade in this environment. So I'm kind of just waiting for that. On your end, and we're not going to get it in one candle, but if I was asking for a candle, it's either the one we got I like on the weekly, or I would want one that didn't touch the 50 and came back and almost fully recovered. That's the best thing about this candle here as opposed to the last one is, I mean, almost fully recovered, which again, we'd say that the 3-2 market, we've been getting the Monday, Tuesday drawback. Wednesday's a crapshoot. And Thursday and Friday, they don't make up Monday, Tuesday. So when you see Monday, Tuesday start to be made up, going back to getting a higher low on a week-to-week basis, I think that's when we'll see the turnaround. But for me, it's going to be a tight candle this week. If I'm predicting a SPY candle this week, it's going to be just a tighter candle, hopefully with a higher top and a higher low and a higher high here, but still that tight range. I don't think we're going to go anywhere this week.
And a couple notes. You have China doing well right now, and that something that we talked about. China sizing. Well, I had some China sizing that's done well, and I also think, like internationally, there's like European stocks that are doing pretty well. There's some South American stuff that's, kind of interesting. And for those, just expect to see some individual names start to pop up. And I think the tariff angle is still just gonna hang around. My feeling on it is you get this kind of initial shock to the downside, and then it's not as bad as people think, or the tariff gets canceled or whatever. So I kind of just look at that kind of news to pull something back to a pivot that you can then jump in on. I think you'll see the flight to safety kind of trades start to make a comeback. Been into staples, big banks. I think looking there is pretty good. And then for the big stuff that's just been moving the market this whole time, your Nvidias, your AVGOs, Stuff like that. I think you just got to be pretty picky and don't look to the worst performer in a sector.
Yeah, don't do that.
And think you're getting a good deal. So we know the names there, semiconductors in particular. But yeah, I mean, there's going to be some range and opportunities there. I just think if you're looking for a sustained swing grind up that's going to hold, you're better off in soda, beer, and spices than thinking that these tech rebounds are going to hold, because I think they'll just continue to have range. Will be the story with Nvidia and names like that.
Yeah, I got a couple notes. I'm gonna read them just because they kind of fit. But I had China range and quantum range, and I think you kind of touched base on the China range. And
Yeah.
man, there's been some great ones from GoTo to XPEV that have just been grinding, and you really can't go wrong going against the total market. And quantum the same thing. That's a little oversold. Those pops are just ridiculous. I wouldn't be buying anything. Again, look at the weekly. I wouldn't buy anything at the top, but if it's getting down there and you got about 6 candles, good time to get the not necessarily lotto sizing, but close to the vest sizing in it, and pull some out of there. Um, I have a note, and it's probably open up a good conversation with you, but pullbacks in good names. The A plus is 10 out of 10 on the street. Um, the two examples I have for this session that aren't the best of the best, but they're the two that didn't make my list, so I'm going to use them here because there's some for the other session. But like Cat and Costco, like if you're an investor and you do want to hold and hope something, those aren't going to be bad from this spot. They really aren't. That's going to be time to start taking. And again, if you're planting a flag, that's on you. But if you want a little piece of it, a good time to start buying stuff like Cat and Costco and just some bigger names on the street, because I think they'll rebound well. And then you can go from there because you're going to have a solid entry. And when we get back to the top, we can read the flow. Um, and whether that's a swing trade or that's now an investment, I think will be fine for you.
Yeah, I mean, if like Costco, if you catch this and even go mid candle and set back up, yeah, that's a pretty good spot. It's for me been a story of we'll look at like Spotify, and Spotify's recovered some, and but again, I had to stop at 500 and went ahead, and I'll just kind of see where it sets up from here, because I don't think it just rips through these highs.
No, you're just playing recovery.
Yeah. So this was a good options trade, and then I hit it a few times within this candle here. Just good, good range on the day, 4%, something like that. And then another one was Duolingo, which did not recover. So again, I had the same idea with Spotify and Duolingo of I had great entries on these, like 150 area. Did that dip under 160 for Duolingo, but it up here to go from 440 to 280.
Yeah,
I mean, I got back out right around here at like 330. And so, I mean, I'm happy. I'm fine with that. And this can set back up and do whatever. But I've had, my whole thing, I've ended up going, people talk about, cash is a position and all of that. I've ended up with that just out of, following a plan to get out of some of these wins, rather than consciously saying like, I'm going to sell everything because I'm afraid the market's going to crash. So it's happened kind of more organically for me. So then as I look to buy, to me, yes, you go back to those 10 out of 10 names. Way back like 2 years ago, I said stocks I like: LLY, UNH, Microsoft, and those did great for me. And I'm kind of in that mode of looking for those next ones. And it is, the solid companies that project to have good growth, and 10 out of 10 names. So yeah, I'm in agreement with you that there's something there. And so you want to talk about two trades. I might, throw Costco in my notes every Friday, have a plan for both directions, but it also is a good time to accumulate some shares on those, I think, as well.
Yeah, I mean, comes back to the what are you doing? And for me, and if you're an investor, the only way you can be an investor is if you have money or you have a way to fund it. Um, and
Yeah.
that it's going to be a different mindset, and you're in it for the long term because you're financially ahead, so to speak, and you can put away, or you're looking for somewhere to put away money and then outpace inflation in both regards. Um, from a trader standpoint, um, you have to you have to just get on base and keep going, moving forward. I mean, you're trying to make money with the money you have. Um, and that I still think one of the biggest curses that you could have as a trader is not being happy with what you have or what you got. Like you're getting on second base or you're getting on first base every time, 8 out of 10, you're nailing it, but you're micromanaging that. Oh, I could have got a triple, or oh, this could have been a home run, versus what you actually have. You have to ruin that mindset. It's one of the things that really helped me through the or that I learned and then helped me after the 2020 rush is, there's a ton of stuff that if I would have just held on, you probably wouldn't be hearing me right now. But I was really big into filling the cup back then, and um, I think that saved me from 22 on. When we were in the down market, just learning how to take money, and I always say, brick by brick, is the best way to go. Just build brick by brick. But you can't have that, oh, what I could have mindset if you're a day trader or a trader or a swing trader even. Um, and again, if you're just investing, you better have an exterior source or already have a pretty big nest egg. So um, understanding that part of it and learning that, I think, is more important than a lot of the little things. Because you can't, I mean, what's our boy Pele's fucking prime example, man. I mean, just getting a couple $100 here and there over and over again. The guy does really well doing that. And I always try to equate it to people like, what's your salary? If you're still working, what's your salary? What are you making? And if you're making 50, $100 an hour, you almost got to equate it like, well, I just got a free hour of work, or free 2 hours of work, and go from there. And the mindset is king to have longevity in this game. And if you're always looking in the rear view mirror on what I could have had, what I should have had, or however you look at it, it's not healthy, and it's not going to create good habits for you.
Boring stuff for a minute.
Yeah, let's do that.
Copper. I feel like a lot of people are now starting to notice copper. I've been on this for a while, but yeah, really nice trend here. And to me, just look at some individual names. Lots of room above in some of these names we look at. So
That's $100
so
stock.
still exactly, yeah. And so you're buying it under 100, then you're doing pretty well. And then silver
That's the one I like.
is, yeah, it's in the midst of what I've talked about. So we kind of caught the first breakout there, and I expect we're going to see another one. And
I've been
gold
trading
3,000.
AG for most of the year, just buying it under 6 and selling
Yeah.
selling some at 6, and buying more under 6 and then selling some at 6. And um, I wasn't great at it at first, and a lot of people are like, well, why I dropped it a few times. Don't search AG in the room. Um, but through that process of selling and buying AG, man, I learned a lot about that stock, and it's a graduate trade for me now. So that we got that 10% breakout above that 6 this week, I'm feels like a home run over here, and I'm sure the night's still pretty young there. Sorry.
No, absolutely, and that's that's the kind of the thing with miners, and I think people get frustrated about this, but when the commodity is in a big uptrend and breaking out, those miners aren't necessarily just
To the
going to
moon.
go along for the ride
Yeah.
and uptrend. But what they're going to do is they're going to recover from their pullbacks quickly, and and then and then kind of catch the trend here and there. And some are going to perform better than others, but that's where you just get to know the sector, the setups, the flow read, plus the TA, and you kind of find the ones that that you like. There aren't a lot of set and forget it
No.
small cap. So you just want to know what you're in,
Yeah.
and
If you
you
gave
can
up
do
on
really
if you
well.
gave up on MUX, I feel for you. Like
Right.
you should.
Yeah.
That's another
Exactly.
one. Another one. I mean, I haven't been as deep in that one, but I do have some, and it's because I've been rinsing and repeating. You know, you buy when it's oversold and you sell at the level, and you just keep some, and eventually we'll break out. And most miners are that way. I mean, with the miner list is just like pick one and stay there. Um, for me, there's just too many in that sector to not get a piece of it.
And gold 3,000. So just sort of on our way to my thesis there before the year. Um, just done exceptionally well there, and yeah, oil still just kind of hanging out. I mean, I'm still liking quite a few of those. The oil natural gas combo are probably the best place to be. So you sort of look at who does that, and then also um, you want to kind of catch the. I like equipment, pipelines, midstream. Um, the stocks that the companies that benefit from uh, activity and aren't quite as day to day linked to the price, because they're going to get paid based on this idea of improving our energy infrastructure and
Yes.
building things and leasing equipment and all that stuff. So those will be good just based on that, regardless of what oil's doing. Although I don't expect oil to have some big breakdown. It's just sort of hanging out right now.
Well, eggs down, interest rates down, inflation down, everything's down. They're not talking about it on the news, but if you go look at the charts, I've been posting a lot of numbers lately, um, like the CPI, PPI numbers, stuff like that. They're doing a
Yeah,
good job of bringing prices down, but oil down is also there, and they said that if we can get the price of gas down, that should be good for everything. I've said it before and I'll say it again, and it's something a thesis I had or an overview outlook I've had since before we started trading, and it's just been fortified or forged a little bit more that I don't care what the price of oil is. I don't. It doesn't matter. It's stability in the price. Those companies, the ones that, especially the bigger ones, they know how to make a profit. They just need to know how much they're paying for a barrel of oil. And the longer that stays consistent, whether it's 65, 72, they do not care. I'm sure there's a price where they're like, wait, that's too cheap. But your bigger names know how to make money. They just do. So as they get oversold or they have pullback and oil stays 68, 65, whatever, as long as the longer it stays there, the better. Because their next report, they're going to kill it. You give those guys a quarter or two at the same price, they're going to do just fine. So I like where oil is, our gas companies are right now, but you have to give them a little bit of time um, to use the environment to their advantage. And then I'm with you on natural gas. Just I think with our infrastructure play, with that pipeline we're talking about building, it's going to be sold as clean energy. Same with nuclear, but natural gas is obviously you have it in your house already, where you're not going to have like a nuclear reactor at home or anything like that.
Right,
I
right.
think you're just going to take that market share of energy, so to speak, from solar, and wind and stuff like that, and do just fine. So, drill baby drill, kind of the you didn't say it, but I'll say it. That doesn't have to be just oil. That can
Yeah,
be natural gas.
absolutely. And a lot of I mean, the bigger names in oil, they've spent the past couple years um, reconfiguring a lot of their leases and um, territory and stuff like that. And kind of in preparation for, I think the move we're going to see in some of those. So the way that some newer oil companies are showing up in flow to kind of complement setups I saw in the big names. There's a lot to like there, and there's just a reason I hang out there, and it's that sector diversification can definitely uh, be good for you. I mean, especially if you get if the 3-2 market in tech gets a little bit tedious for you, there are some places you can start to just accumulate some shares and just catch a sustained move. So that's what I'm after there. All right, so yeah, that's pretty much what I got. I think we already touched on SPY, so
Yeah, I mean, I don't.
not sure.
I like not
Yeah.
not ending with spy, transitioning to that anyways. Did you just leave it? I guess we'll leave it with
Yeah.
one more question. Like this week, probably still 3-2. We're going to be thrown off with a good Monday. That's kind of what
Yeah.
it feels like to me. I mean,
Yeah. I no. I think
3-2 can still mean Monday good, Tuesday, Wednesday meh, Thursday, Friday good. That's still 3-2,
yeah,
and that's just
it
that's
is, and I think that Monday is important to set the tone. So definitely, going to be interested in futures overnight and all that. You do have crypto pulling back just a
oh,
little bit,
we
but
almost made it through the session.
nothing.
We almost made it. Like and subscribe. Link somewhere, people.